Hi, in this video I'm going to show you the top 5 insights that you can communicate via Vaulta to your clients. Now firstly, I would say there's way more than 5 different insights that you can provide via Vaulta, and you as trained accountants are going to know how to spot those. But here's 5 of the most common ones that we see across virtually a whole client base and that the clients love to know about, and it really adds value. So first of all, we're going to be checking the dividends available. This is the reserves, the net reserves of the company. Have they got reserves that they can distribute as dividends, or is it a negative? So have they declared too many dividends and therefore it's not a qualifying legal dividend and we've got to go and fix something? So in this case it's a plus, so great, but if it's a negative here, then obviously we're going to go back to the client and tell them that that last dividend they declared probably wasn't valid and we probably need to reclassify it as a director's loan or something similar. So number 1, making sure the dividends available is positive. Number 2, talking to them about the tax consequences on these dividends. So we have to be really careful when we communicate any data regarding dividends to clients, whether it's via Vaulta or any other format, because we want to make sure that they understand the tax implications of withdrawing dividends. If you have a relatively new business owner who's not familiar with dividends and tax and how that all works, they can quite often, in my experience, misinterpret the fact that they've already paid corporation tax, withdraw dividends, and therefore don't have any other tax available. So making sure that we use our expert knowledge when we're telling them how many, the max amount of dividends available, what the tax rates are and the sort of things they need to be thinking about when drawing dividends. We could even go one step further and use this to facilitate a tax planning call. So number 2 is tax on dividends. Number 3 is a favourite for all accountants, but it's around the director's loan balance. So is it overdrawn? Is it positive or negative? And in case you forget which way around here, we even have this handy tooltip here which talks about what this means. So it reminds you a positive balance here means that you are owed this money from your business, and negative balance here means you owe your business this money. So in this case, this is an overdrawn director's loan. So we're going to be talking to them about what that means, whether they could be offsetting that director's loan against other aspects of their available. So could they declare a dividend to clear that director's loan? Is it going to be over 10k? Is it going to need to be reported on a P11D? And how close are we to the 9 months after the company year end? Do we need to be thinking about the implications there as well? So this video is not to teach you how to talk about director's loans. You guys know that as experienced accountants, but this is a really, really great proactive way of communicating that with clients. If we don't do this in a proactive manner, and we get to the end of the year and prepare a set of accounts or a P11D and the client's not aware of it, then that's a recipe for disaster in terms of our relationship with that client. So number 3 is discussing the director's loan balance with them in advance. Number 4 might seem a really simple one: taxes. Now they can go and view this data themselves in free agent in different places. However, you as accountants proactively reminding them and talking to them about these taxes, the due dates, the amounts that they're due, and particularly the corp tax, the split between the current year that hasn't yet become due and the year the year that's passed hasn't yet become due, and the current year that's starting to accumulate. And just reminding them, just talking to them out loud, reminding them of what these taxes are when they're due, is an additional benefit above them having to go and look themselves in free agent, because they might well forget to do so. So number 4 is talking about taxes. Now number 5 is sort of taking all of this data together at the top here and talk to them about cash flow a little bit. Now when I say a little bit, it's because we're not going to delve into tons of detail here around cash flow within Vaulta, but it's starting to facilitate that conversation. So as we well know, the dividends available figure is based on invoices raised, the invoice date, regardless of whether that's been paid. So what I like to do to really add value to our clients is to take a look at the dividends available, but also look at the bank balance, the trade debtors, the director's loan, and the tax. So what I would be looking for is saying, well, this client has £25,000 worth of dividends that they could take maximum. What does their tax situation look like? They've got a lot of tax that's due. What's their bank balance? Do they have enough left? Or are they paying out dividends when they really are taking it from the trade debtors figure? So they're starting to eat into their tax balance that's in a savings account, hopefully. So that conversation there, facilitating around cash flow, is vital. So to recap, 5 of the top insights that you can very easily and quickly deliver with Vaulta are: have they taken too many dividends? So the reserves, is it positive or negative? What's the tax situation likely to be on those dividends? Do they understand that there's additional tax to pay? What's their director loan balance looking like? Is it overdrawn? What are the implications of that? Is it over £10,000? Are they going to be able to repay it within 9 months? A reminder of what their taxes are and the due dates on those. And then the 5th is an overall sort of summary of the cash position, looking at dividends available, the taxes that are due out, and then paying attention to the bank balance and particularly the trade debtor figure as well. Now, there's tons of other insights that you can create as a practice and facilitate your accountants to deliver. Each client's going to have a slightly bespoke element as well. So we'd love to hear you sharing with us the insights that you have come up with to facilitate via Vaulta to your clients.